Morning, everyone. Keep waiting. This is calling to order the Tuesday, July 19th, 11 a.m. meeting of the Supplemental Retirement Board of Trustees Audit Subcommittee. We'll call us to order. As you know, with virtual meetings, we have housekeeping issues that any correspondence, text message, or otherwise during the meeting regarding subjects of the meeting or public goods subject to public record requests. With that, we have a conflict statement. Does anyone have a conflict or non-conflict regarding any matters here before us? Hearing none, the clerk will call the roll to determine a quorum.
Treasurer Falwell.
Here.
Melinda Barron. Melinda Barron. Steve Bean.
Yeah, here. Melinda's
here. Thank you, Melinda. Steve Bean.
Here.
And Michael Lewis.
Here.
Thank you.
All righty. Sorry, I just skipped over. If you'll stand and join us in our Pledge of Allegiance. Flag, United States of America. Which stands one nation under God, indivisible, with liberty and justice for all. Thank you for doing that. Now go to 3 with Auditor's report. That draft 2021 financial statements for our 401 and 457 plans. Chris, welcome.
Thank you very much. Good morning, everyone. Just a quick introduction before I go through the prepared materials. My name is Chris Kessler. I'm a principal with CLA, Clifton Larson Allen. A new face as opposed to the individual Jason who was here presenting to you back in the late winter, early spring. As far as our audit plan, we have had some turnover, so I am now the principal on your all's accounts. In my background, I've actually been focusing on state government, state retirement plans. My entire career, I've been in our Baltimore office, our Charlotte office, and now I reside in Southwest Florida, which is Fort Myers and Naples. So my entire career has been serving clients like you all. It's been a pleasure to get to know some of you over the past couple weeks, couple months here in completing this audit. Looking forward to continuing on. So with that said, moving into the actual presentation itself, you all have a copy in front of you, but just going through the agenda, we're going to talk through the 2021 audit results. We're going to talk through some required communications that I am required to make to you all under our auditing standards. We're going to go through a brief summary at a high level of some of the 2021 activity, and then just give a quick overview on some of the employer compliance testing that we perform on the two plans. So moving into the 2021 audit results, I have some bullets here pretty much, talking through some of the specific language that we present under, but the thing that you want to hear is it was a clean audit. Our opinion was unmodified, which is the highest level of financial statement opinion that you can have. That means the financial statements are free of material misstatement. We do not have any issues, any sort of accounting standard departures or anything along those lines. The statements themselves in our audit opinions and our reports, they look slightly different than prior years. There was an audit standard change, Statement of Auditing Standards 134 that went into effect for this year. It did not change anything that we did. It did not impact your all's activities or the end of information in your financial statements, but our opinion looks different. It changed the layout. Essentially, the standard setter said auditors' reports are too confusing. Let's make them a little more simple in what we're doing. So if you're looking at last year's compared to this year, you'll see our reports look different, but content-wise, still the same information. The independent auditor's report on internal control and compliance, shorthand referred to as the internal control report, we had no findings. So that means it was free of material misstatements, material weaknesses, significant deficiencies. We had done 2 reports. And then there will be a third deliverable that we'll be issuing with the final financial statements. It's our governance communication letter that is intended to go to the subcommittee here that really summarizes the results of our audit procedures. I'm going to talk through some of those points in that letter and make those communications today, but that'll be the third deliverable that we issue as required under our standards. So the required communications, if you can go to the next slide, please, Patty. Thank you. So these are the required communications that are in that governance communication letter, but just kind of quickly running through the significant accounting policies of the plans were described in note 2 of the financial statements. They are in line with generally accepted accounting practices and principles. All significant transactions are recognized in your financial statements, and there are no transactions that lack authoritative guidance within the financials. Significant accounting estimates, I do have to highlight those in the communication, just given the fact that they are significant to the financial statements. Obviously, investments are subject to fair value accounting and subject to change at any point in time as the market fluctuates. So I do have to just clarify, they do represent the estimate as of December 31st, 2021, and we audited those estimates that went into those values and found no discrepancies or issues. Significant disclosures within the financial statements. There are no disclosures that are particularly more significant than others, but the disclosures are neutral, consistent, and clear. We encountered no difficulties in completing the audit, and there were no uncorrected or corrected misstatements. So the numbers that are in the financial statements are as prepared by your teams, and there were no adjustments noted by CLN or audit procedures. So moving through to the next slide, there were no disagreements with management. Management has made certain representations to us at the conclusion of our audit that will be dated today. The last step that we need to issue these financial statements into final once you all approve. Management did not consult with any other independent accountants to our knowledge, and there were no significant issues that were discussed prior to our engagement as auditors that impact our procedures or anything along those lines. So again, these are all required communications, but I just want to say the audit was very smooth. We had no issues. There were no misstatements, no issues. Management was a pleasure to work with, as always, getting us what we need so we can complete our work efficiently and effectively as we move through. So before I move into the actual results within the statements, any questions or comments to this point? All right, great. So looking at the 2021 financial statement highlights for the 401k plan, you can see some of the differences year to year between 2020 and 2021. And so, you look through your numbers here, your investments have increased compared to the prior year, as well as your fiduciary net position, which is it's your equity, it's your assets less your liabilities, has increased by 1.5 billion, 12% over the prior year. So going to the next slide, you can see some of the items that are driving that change in your fiduciary net position. And you can see your net investment income was up 5% from prior years. Your contributions are higher than prior years, and your distributions were lower than prior years. So just doing the math behind the plan, that's driving a lot of activity year to year. Moving into the 457B plan, very similar from a balance sheet perspective. The investments have been increasing over time, and again, this is consistent with what we've seen everywhere in 2021 for all of our clients that are based off of market activity. And as you go to the next page and look through some of the income statement results, your net investment income is up 5% over the prior year. But the reason you have a decrease in your fiduciary net position is there was just an increase in distributions out of the 457B plan this year, over 50%. So that impacted the end results pretty significantly when you look at it. But again, your plans are going to have those fluctuations where distributions are happening at a higher level or lower level year to year. So from a perspective of a fluctuation, everything was consistent in how we looked at it. There were no issues or discrepancies with our audit procedures. So before I move on, any questions or comments on the numbers themselves? All right. So then moving to the next slide, just quickly talking about the employer compliance testing that we perform. We do test 25 employers throughout the state, and we always focus on the 10 largest employers every single year, and those employers are always very happy to get our emails and our phone calls saying we're going to be testing them again. But everybody was great in getting us what we needed. Some needed a little more pushing to make that happen, and we always appreciate the help that comes along with that pushing that you all give to get the information we need. And then there's 15 employers that we test on a rotational basis as well to make sure that everybody is being tested within a certain time period. We have some findings that we worked through with the employers. None of them were material or significant to the financial statements. It's all minor things such as participant data, date of birth, particular benefit elections, things along those lines. And the real benefit behind it is it's more education for the employers. You know, again, it doesn't impact your financial statements, but some of these employers are either following policies and procedures incorrectly, or they're filling out the wrong forms, or they're potentially not allowing. They are essentially preventing, by their policy and procedure deviation, they're preventing some of the employees from participating at the level that they should, or making the proper contributions or things along those lines. So it's a big educational process when we find these issues, and the employers always work hard to clean them up. You work with the folks here as well as the folks at Prudential to make sure that everything is getting adjusted and updated, and that education is moving forward. So again, we'll continue doing that, but it does not raise our risk. And if we did, we'd be having a different conversation right now as far as what we've seen. So we'll continue looking at that, and we'll continue to assess those results with our audit test work. But as it sits for 2021, it was all very low risk, very minor items. So with that said, that's really the end of my prepared comments on the financial statement audit. So I do again want to say thank you to everybody that played a part in the audit. I know we asked for a lot, and you know, we are under a tight timelines and a lot of times to get this work done. So I'm always appreciative of the assistance that all the folks here provide to our team. And Tanya, my senior, is always appreciative as well. So she passes along her thanks to the team. So with that said, that's the end of my prepared comments. So I'd love to take questions and comments at this point.
Any questions from board members?
Yes, this is Melinda. Okay. I think the audit was really nice, easy to read and so forth, but with all the information on how well we did as through 2021, a question came to mind for me relative to the basis point fee that we changed on, let's see, as of February 24th of this year, we set our administrative fee at 1.25 basis points, and I am wondering if we need to examine that in view of the fact that interest rates are going up so dramatically and the stock markets have fallen so much. I just want to be assured that we're going to end up this year okay relative to our administrative fee balances.
So Melinda, I can address that. So when prior to us bringing that change to the board, we did test those numbers. We actually did a 20% market decline, not thinking that we would ever see that, but we did test it against that. And we will be fine at the end of the year. We do have sufficient balances. And as we had mentioned, that's something that we will test each year to ensure that we're staying on track and have the right balances.
Okay, that sounds great. Thank you. That's the only question I have.
Chris, hey, this is Michael Lewis. I had one question for you, just kind of on a macro level. I know that Clifton Larson Allen does a lot of plans all over the country, and I think it's always helpful to know, like, when you run into, if you run into non-clean audits, what type of things that you're finding. I'd just be curious if you had any examples of that.
Michael, I'm sorry. When you said we're running into what kind of audits? I missed the word there.
Unclean.
Unclean. Well, in this space of statewide retirement plans, we don't run into a lot of unclean audits. They're usually very sophisticated. They usually have a pretty robust management team to work on the financial reporting side of things. So we don't run into a lot of unclean audits where we're having potential unclean opinions or we're modifying our opinion in any way. When we do run into things, it's typically audit adjustments that under standards we're having to report a finding at that point. It doesn't change our opinion, but we may have an internal control finding It would change our opinion if that plan decided not to book the adjustment that we noted, and then that's a whole other can of worms that could be opened up at that point. But typically, it's what we're running into, especially right now in 2022, where a lot of entities are being asked to do more with less, or there's a lot of moving pieces. There's just open positions, turnover, people new in roles, whatever it may be. Things fall through the cracks. You know, whether I didn't know this was our policy or procedure, I didn't know this is what we were supposed to do. I thought I had my hands around that, and things fall through, and we noted in our audit procedures. We're seeing more of that really over the last 12 to 18 months with kind of what's going on in the world. We haven't seen any issues as far as fraud or anything along those lines, but it's typically internal controls, policies, and procedures, and making sure that folks are still staying diligent and sharp and ensuring that that stuff is done. So we look at internal controls every year. That's part of our process. That's baked into our audit plan, our audit risk, and we will ask to see those internal controls every single year. We do not rely on prior years. So that would be the one thing that I would probably just recommend or comment on to you all is, as you think through what you all are doing, we didn't note anything that said this is an area for improvement as far as controls and policies, but you have to stay diligent. You have to make sure that you're crossing your T's and dotting your I's. Look at your segregation of duties. Make sure that people are in the right spots, wearing the right hats. And if there are folks that are either out sick, either on a leave, or there's turnover that's unexpected, you're looking at your controls and policies and procedures and making sure that your gaps are filled and things are still strong throughout the year. So Michael, I apologize if that was a longer answer than maybe you were looking for there, but that's, I think that's perfect. That's what we're seeing, and that's really kind of the perspective that we're coming at it from an audit perspective this year.
Yeah, that's great. Thank you. That's very helpful to know.
Okay. Any other questions?
I've got one. This is Steve. Just along a similar observation of that. The distributions in the 457 were up 50%, although it was not a huge number. But is there any? Did you see anything in other plans where those went up where 401ks did not significantly, or is that just a one-time aberration, maybe tied to COVID related or something? That was just an unusual percentage that struck out to me.
As far as benchmarking that across other areas or other plans, we did look at that when we were performing the audit to say, is this consistent with trends that we're seeing across our clients? And we really didn't. It's fluctuated in a variety of manners across various geographies across our clients. But anecdotally, I think what we're seeing is that it is COVID that's driving it. You have folks that are leaving the workforce. You have folks that are changing positions, they're having other financial priorities come into play. And 2021 really being the first full calendar year after the pandemic went into effect, I think you're seeing that play out in totality between 1/1/21 and 12/31/21, and that's driving some of that increase of folks leaving the plans or leaving the workforce.
And if I may add on to that, we did look at that because we did think it was odd to see the 401k trending down and the 457 trending up. And exactly to what Chris said, there was such a spike or usage of the COVID related CARES distribution that it spiked in the 2020 year. And then that's why it's lower. But yet, when we looked at the underlying trends, they're both trending in the right direction. It's just that 2020 kind of created an aberration in terms of a spike based around the CARES Act.
Okay, thank you.
Good questions. Any other questions? All right. Any fears we should have based on other audits you're doing for other folks?
I would say no to fears, but with all of the fluctuation in the markets right now, and I know you all are obviously keeping that top of mind, just being diligent from a financial reporting standpoint of just keeping an eye on that, looking for anything that's going to impact your financials. Again, You all are very sophisticated in your operations, so I don't think there's anything you have to fear, but I would be remorse if I didn't comment on the current market situation that we're all dealing with right now as being top of mind for you.
At the risk of delaying the meeting, so will we have a final audit on the 403B, or was that part of the scope of this, or tell me what we should expect there?
That's not a part of the scope of this audit. This is just on the 401k and 457 plan.
It's always been on those two?
Excuse me?
Is this audit always been on just those two plans, not the third one?
Yes.
Yes, that's correct.
Oh, I thought we always had one that did all three.
I think any final accounting probably would come from Empower.
Well, let's back up. I thought in previous years, we've had one presentation that covered all three plans. Is that not true?
Just the 401k, 457, the 403B don't.
Yeah, that's right. That's not been, it's only these two. That's,
Okay, so we've had one for these two, and then the 403's always had its own.
well, no, doesn't a census do,
So the 403B, the individual employer is the plan sponsor of that plan. They just adopt our investment program. For these two plans, we are the plan sponsor.
So we don't have another meeting like this about the 403.
We do not, because that's really on the individual employer
Yeah.
to have their plans audited.
Okay. Well, glad we're out of that business. Now, I didn't know that. So, sounds like that's, could be risky. So, we now have received the auditor's, report draft with no findings. Thank you, Chris, for that presentation. Do I hear a motion to accept this?
So moved. Steve.
Thank you, Steve.
Second.
Co-seconds. Any further discussion? All right. Well, since you got co-seconds, I vote aye, and that does it. So, all right. Anybody sign for public comment? Thank you, Patty, for arranging all this, for staff put this together. Would any member like to make any closing comments?
This is Steve. I'd like to ask another question of Chris, maybe just curiously, given the interest rate spike that we've seen the last 3 to 6 months, has there been any concerns or questions about some of the stable value GIC contracts and all of those being disrupted in a market that's had a significant change? Just is that issue come up as you've looked at things?
Honestly, we haven't gotten into it yet. We've been having discussions, and we actually have been bringing some of our wealth folks into the conversations to support our audit teams. But given how things are continually progressing, again, we're going to see it again this month. We haven't seen any risk increases as a result, but it is something that as we're doing our planning and we're looking at some of our audit procedures, we're going to have to look at for calendar year 22 or fiscal year 22 on how it's going to impact our clients. But at this point, I don't have an answer to say this is exactly how it's going to impact that one way or the other, but I can tell you we will be looking at it significantly.
Thank you.
Thank you. Any other discussion? For the benefit of the board members, something I've sent an email on some point the last few days. Everywhere I go to speak, where we have participants in the 401 and the 457, they've gotten things a little out of sequence because they said, we sold or we've changed vendors to Empower, and their portfolio's down 20% as a result of this. And so I'll just say publicly to the board members what I've said to our staff. In any of our future, most as soon as possible publications, we need to educate our members that we did not switch vendors. We did not negotiate the sale of Prudential to Empower, and we do not have responsibility for their performance inside their 401k. These are all self-directed plans. So I just think we need to do a better job of explaining that we had nothing to do with it. If we were at every turn of this road, we were reacting to something somebody else was doing. So I'm sure, is Christie listening in?
I don't know.
Anyway, we'll get back together and see how we. Was that clear as mud for the members? I guess so. All right. With that, I'll entertain a motion to our next meeting will be August 25th. And I entertain a motion to adjourn.
Steve, I'll make that motion, but I congratulate the audit results and everybody involved. Great job.
Thanks, Steve. Second.
Second, Melinda.
Thank you. Any further discussion? Hearing none. I vote aye. Peter? Michael?
I vote aye.
Okay. All right. Ayes have it. We're hereby adjourned. Thank you very much.
Thanks, everybody.
Take care.